Greetings, tax tip lovers, and welcome to this week's top 5 tax facts in just 5 minutes. Come listen up, tax tippers, to important news from Ye Olde Tax Tavern, where conversation focused on HMRC's announcement it had closed down the specialist unit established to examine tax avoidance risks posed by family investment companies. Well, as Abraham Lincoln said in one of his speeches, don't believe everything you read on the internet. So we checked, and it's true. HMRC says it found no evidence of correlation between the use of family investment companies and non compliant behavior. HMRC concludes it now has a better understanding of the characteristics of family investment companies, and the use of these structures does not suggest taxpayers that use them are non compliant when it comes to their tax affairs. So, family investment companies will now be treated as business as usual by HMRC rather than be subject to the scrutiny of a dedicated unit. Okay, here we go. Let's unwrap this with a little help from Ray Davis and the Kinks from May 1966 as we count down the 5 potential benefits of a family investment company. Static at this week's number 5 is the tax man's taken all my dough and left me in my stately home. First, mum and dad create the family investment company and fund it with cash. Mum and dad are the directors and the holders of all the voting shares, and their kids are each given a non voting share. That way, if any of the kids need money, mum and dad can just declare a dividend. Down at this week's number 4 is lazing on a sunny afternoon. Mum and dad are in complete control of the company, but they've reduced their taxable estates because their shares carry no economic rights, only voting rights. Just inside this week's top 3 is, and I can't sell my yacht. There could be more protection because while the kids hold shares outright, the company's articles can stop the transfer of shares to anyone who's not a descendant of mum and dad. Think possible future divorce. A new entry at this week's number 2 is, he's taken everything I've got. In future, when mum and dad decide the kids are ready, they can bring them onto the board and give them voting shares. Staying at number 1 is the all-time classic, all I've got's this sunny afternoon. So here's the thing. Mum and dad have reduced their taxable estates by shifting value to their kids, but without handing over control. Cue Steve Jobs. It's more fun to be a pirate than to join the Navy. Other useful tax benefits are that funding the family investment company carries no tax charge, and it will only pay 19% on the sale of underlying investments, but that may rise to 25% from 2023. Better still, if the company declares a dividend, the tax rate depends on the income of the recipient. So if, say, son is at university and therefore has no income, dividends of up to £14,500 may be paid to him tax-free. That's his dividend allowance of £2,000 plus his personal allowance of £12,500. Oh, and the next 37,500 will attract only 7.5% tax. Well, let's not frighten the horses. Back in the snug at the Olde Tax Tavern, there's broad agreement that for now, family investment companies can be a very attractive option for mum and dad, or nana and gramps, who want to pass on their wealth while still retaining control over their assets. Of course, it needs to be done properly, and you will need a tax expert or a specialist accountant. Cue Monty Python. It's fun to charter an accountant and sail the wide accountancy. Okay, that's it. It's time to take action to sort your property tax planning, and here's how. You can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or you can follow the link above for a free Power Hour review with property tax experts who are ex-PwC and ex-HMRC, and will make your property tax planning like it was our own. And that's our take on how to gift assets and still keep complete control, and why we believe you need to take action, tax tippers. So, volume up, time to let Ray Davis and the Kinks tell it better than I ever could. All right, stay bright. Catch you again for breakfast next week. Ta